Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 16th of May 2021. As we all know, the markets have their ups and downs and of course gold is no exception. So what actually lies ahead for the gold price? Well, I hope you've got your beverage of choice beside you. Sit back and relax because I'm about to take you on an adventure into the unknown. During this journey, there will be some good news, there'll also be some bad news, but there'll also be more good news. Now, what I'm about to discuss is purely my current opinion. So firstly, my opinion can change depending on, new information. And the other thing to note is that this is not advice. I'll be discussing several different ideas. But that's all they are, ideas. Nowadays, it kind of feels like ideas are frowned upon. You can't seem to say anything these days without someone taking offence. This talk also includes plenty of assumptions. I freely admit that. But look, that's the nature of finance and economics. When the gold price exceeds $2,000 again, which I think it will, then we're going to be in blue sky territory. And because we'll have no prior support and resistance price levels to provide us with clues, how can we navigate these blue skies? Well, today I'm going to put forward some ideas for ways of doing such a thing. Bear in mind that we're working with limited data for gold in the fiat era. And remember that we've only really had two big secular bull markets in gold. Each of the techniques I'm going to discuss has flaws. That's the other thing to remember. None of these things are perfect. And as always, remember that we're working with probabilities, not certainties. Look, my name is not Mystic Meg, so if you're looking for someone with a crystal ball, you're going to have to look elsewhere. I don't have any special magical powers, I'm afraid. Right, let's begin. So the first thing that we should do is determine what type of secular trend you think that we're in. By secular trend, I mean one that lasts for over a decade. So right now, do you think we're in an uptrend, a downtrend, or in a sideways market? Now, if you're bearish on gold, then I think you might as well just stop watching now because the rest of the video probably is not going to be of interest to you. For a whole host of reasons, I believe that we're currently in a secular gold bull market. And as I said in my previous video, I think that we've got at least another 5 years to run in it. But look, for more detail, go back to that previous video on that topic. I think it was called How Long Will the Gold Bull Run? Next, we also know that secular gold bull markets are volatile with primary and secondary bear markets interspersed between them. The 70s bull market occurred in two stages shown here, separated by a primary bear market. So this is stage 1. That was the primary bear, and that was stage 2. And I've marked the corrections that happened along the way. I kind of marked the major ones really here. And you can see that they had about 4 or 5 corrections for each leg. If we look at the bull market of the 2000s, that was not really all that much different. There were about 5 corrections ranging from about 10 to 30%. For more information on the volatility, take a look at my previous video on how gold and silver can make you feel sick. So what can we expect regarding volatility from where we are right now? Well, I think based on the information that we've gathered so far, we should expect volatility to increase as the bull market progresses. The drawdowns are likely to be around the magnitude of 20 to 35%. And I'm estimating that we'll get 2 such drawdowns going forwards. And so that's all based just on historical data. When will the next drawdown occur? Now that's a really tricky question. I tried looking at this by plotting out the days between the peaks that I talked about in the volatility charts that I've just shown. Now, this is the resulting chart, and you can see that it's really quite variable. There's no clear pattern here. All that we might be able to say is that let's assume that the next peak in the gold price will be peak 3 in this leg. Then we can see that the next peak might occur between 1 and 2 years as a rough thing. And so that's after peak 2, which was basically back in August 2020. If that's the case, then that would suggest that the next peak in the gold price may occur between August 2021 and August 2022, roughly. But look, this is really just conjecture. We don't have great data for this. Here's another assumption. Now, I actually think that different assets have different characters in terms of their price behavior. More detail of that I'm going to talk about maybe in a different show, but basically the upshot is that my view is that gold as an asset class, remember this is very different from individual stocks, I think it has a tendency to intermittent parabolic moves. Now, if we look at this chart, so this is gold on the monthly scale, you can see here we've got a huge parabolic move over here, and similarly we had a big one over here. But look, you know, that's just 2 parabolas. Is that enough to draw that conclusion? Well, actually, parabolic moves can be observed in gold on the multiple time scales. So you can see it on the weekly scale, daily scale, even hourly scale. So here are a couple of examples here of parabolas. So this one's on the daily scale, and this is from 2005 to 2006. And this is again on the daily scale. This is going back into the 1980s. You've got a small one here, and then you've got another one over here. So I don't know. That's my view anyway. You can see it on multiple time scales. So look, those are the assumptions that I'm working on, and I don't think they're particularly unfair assumptions. So let's go with that. Okay. So the next question is, what is the price target for the next peak? Now, note that I said the next peak. That I'm not saying that that's the final peak of the bull market. I think that's a way out, and I'm not going to start predicting that far out. So all of this work that I'm doing is really talking about the next couple of years. Now, one technique we can use might be to join the previous peaks. So this is gold on the log scale, and I've joined the 1980 peak and the 2011 peak over here. Now, look, this is only 2 data points, so of course it's not going to be particularly reliable. But look, it does come up with a kind of potential resistance point at least. And this would suggest that we've got a target of around $2,500 there. Whether that holds as a resistance level to form a kind of localized peak, I don't know. But yeah, look, I agree. That is quite weak as a form of analysis. But, you know, we're going to try different things and put it all together. What if we just zoomed in and just joined the peaks in the current bull run that we've had? So this run here, we've got the peak over here and the peak over here, and I've joined them up. And interestingly, it actually coincides with that previous trend line that I spoke about in the last slide. And that's giving us a target of the same, really, around $2,500. And that's also suggesting a potential timing of that maybe, if of course price peaks at that intersection. And that points to the second quarter of 2022. That's interesting, but again, that's not particularly strong evidence, is it? Let's look at some other techniques. If we're thinking that this is a cup or a cup and handle formation, then we normally use the height of the cup to give us the target price. So I've drawn a few lines here. If we were to include the wicks, so that's this length here, and then we just project it upwards, that gives us a target of $2,794. If we exclude the wicks here and just go for the kind of top of the candle body, and so that's the line I've drawn over here, that would give us a target of $2,544. There's that number again. That's interesting. Another possibility is that if we just go from here, some might say, oh, well, look, this is a flagpole and we've got a flag here, and then we can get another move up. And if we were to say that, then the target would be the height of this pole, and that would give us a target of $2,770. Okay. Now another method people use is Fibonacci levels. So to do this, I join the high from 2011 to the low in end of 2015, and this is what it came out with. Now, some people say that price can pause at the 1.618 fib level, but look, note here that when I did try it on other price action in gold and other assets that had a similar kind of shape to it, that only happens sometimes. Sometimes it just went straight through it. So it's not overly reliable yet again. But if we do kind of take note of it, that gives us a target of $2,462. So it's close to the 2,500 we've been seeing so far. If we log adjust the fib levels, then we get a slightly different target of $2,796. But look, again, we're getting a similar range of numbers here to the previous techniques. Let's see if this kind of trend continues. What about if we use second order polynomial curves to predict the next peak? So shown here are the dots that I've marked for the extreme highs in orange and the extreme lows shown in blue. And the lines here have been drawn by the computer to give us the best polynomial regression fit for each of these dots here. Note that the R² value basically tells you how well the lines fit the data. So if it was 1, then that would mean it was a perfect fit. Now you can see here that the blue line gives us an R² of 0.9948. So that's a pretty good fit. It's about as close to perfect as you can get, really. So that's really good. The orange line, the fit is not bad. It's still close. It's 0.9, but it's just not quite as good as for the lows. So the lows are going to be more helpful than the highs. And, you know, particularly as we move up, we're more likely probably to get an overshoot, I would suspect. Now, this might all look a bit abstract, and I wanted to actually get this overlaid on the live chart in TradingView. But as I said, I don't know how to code in PineScript in order to do that. We did have one viewer who kindly offered last week to help with that, but their message actually disappeared before I was able to reply. So sorry about that. But look, until we can get it sorted, I thought I'd try using my Photoshop skills to help us with this. So it's a bit blurry, but look, basically what I've done here, I've overlaid the preceding chart and adjusted it to overlay it on the trading view chart. So you can just about make out the bars over here. And look, it's hard to get this absolutely perfect when you're overlaying. So it will be slightly out. It's not ideal, but look, it will just will make do. It'll still be helpful until we can sort something out. So at the moment, we've just bounced off of this spot over here and we're moving up here. So now we don't know when the next peak will occur. I'm working on the assumption that this is going to move back up towards this or to form the next peak. Now, there's a few possibilities here. If we think that it's going to occur, let's say in August this year, so that would represent this line here, then we'd be looking at a peak of around 2,300. But look, that seems a bit kind of quick, really. I don't know, that would be quite a steep rise. If it was February 2022, then we'd be looking at a target of around 2,600. And if it was August 2022, it would be 2,800. So basically we're looking at these spots here. So where is the next peak likely to be formed? Well, I'm kind of erring towards this one here in the middle. It kind of, if you look at how price moves, the kind of slope of this, that would seem kind of quite reasonable in terms of this kind of speed and the angle. But again, you know, that's just conjecture. But look, if it is that one, it's 2,600, which is pretty similar to the targets that we've discussed so far. Now, look, of course, to get to this peak, it's not going to get there in a straight line. So the next thing we've got to consider is what trajectory is it going to take? Now, this is actually a really tricky question, and I've thought about it. And the only way that I can think of to solve this would be to use Elliott wave theory. Of course, if anyone knows of any other techniques for this purpose, then you definitely do let us know. Now, my knowledge of Elliott wave theory is rudimentary at best, but I know that we have at least 2 viewers in the audience who have in-depth expertise in this. And so hopefully you guys can help. Now, my understanding is that we've just completed a 4th wave correction and we're entering the 5th wave, which in turn in itself will consist of 5 waves. So if we work on the assumption that the 5th wave will end at $2,600, is there any way that we can estimate the location and magnitude of the 2nd and 4th waves within that big 5th wave? So yeah, there's a challenge for you. Next, the word peak implies that it will be followed by a drop in price. And our discussion of volatility suggests that we can expect a substantial correction after the price has peaked. If we assume that the gold price peaks at $2,600 and it corrects after that, then if we say that there was a 20% correction, that would drop it to $2,080. And if it was a 35% correction, then that would drop it back to $1,690. Ouch, that would be painful. But again, this is just conjecture here. How big is this correction likely to be, and when might it occur? Well, one way of looking at it is that we could try drawing a trend line on the log chart. And so if we're thinking that this might happen in 2022, which is around here, then this would suggest a maximum low of around $2,000 over here. But look, note that in the last bull market, if we drew this trend line here, at a similar stage, so basically we had the high and that was taken out here, so we're in a similar position over here, You can see that it kind of touched it once here, but after that, it didn't even touch that trend line at all. Therefore, this trend line tends to overestimate the lows, and so it's likely to do so as we get further up. So not sure how helpful that trend line is going to be. What if we go back to our polynomial chart? So again, now when I've looked at previous examples of these polynomial charts first of all within the gold market in previous years, but also with other stocks and so on. What I found is that this is useful for the first couple of years, but just similar to the log scale, after that it tends to overestimate how low things can be. Price just tends to go higher than that. Now on this chart, even if as we're watching price, so let's just say that it does kind of move up to 2,600 in sometime in 2022, it's still difficult to estimate where the low is, because of course it's not going to just go directly straight down here. It's going to take time, just as we saw here. I mean, this took months and months to play out here, and this, it's hard to know. This may well do the same. And so we won't really know until nearer the time as price action develops here. If the low occurs in late 2022 to early 2023, so that's about here, and so let's say price comes down like this, then we're looking at a target of around 2,100 there. Now this next one might seem a bit far-fetched, but look, hey, we're just playing around with ideas, okay? That's all. This chart here shows the second leg of the 1970s bull market. So we've got this kind of cup here, which we're kind of seeing now, and this just gets steeper and steeper to form this parabola. Now look, what if, this is literally a what if question. What if price played out in a similar way? Now I'm not saying that is going to happen, I'm just saying what if. So to look at this, I copied the bars from here, and so this is on the weekly scale, and I pasted them onto the current gold price on the monthly scale. Now, this is the result. Now, what I've had to do, you have to, when you do this, you do have to adjust the proportions to get the fit. So that's one of the flaws, is that subjective element, because you have to adjust it both in terms of time, but also in terms of price. But look, this seems to be a reasonable fit. It's not a terrible fit, but it can probably be tweaked a little bit here and there, but it seems okay. Have a close look at this. Don't you think that the price action is spookily similar so far? So you can see the green and red bars is the action, price action, and at the moment we're at this level over here. And the blue bars are the pasted bars from the 1970s bull market. So if this is correct, then this suggests that we're going to get a rise to around $2,600. There's that number again, followed by a drop to $1,985. That's interesting, isn't it? The other interesting thing is that if we look more closely at this move upwards here, you can see that here we've got the second wave, and here we got the fourth wave. So this would suggest that the second wave is at around that 1950 roughly, and this one here begins at around 2300. This would be interesting if this actually played out, and I'm interested in hearing from our Elliott Wave experts about this. But kind of psychologically, I reckon as we've got up here and then price dropped, I think that could shake quite a few people out here, and then you get a much bigger move here, and that'll be the kind of last move before the big drop. Now, in terms of timing, this peak over here, this is suggesting it would occur roughly in mid 2022, and the bottom of the correction over here would be in late 2022 to early 2023, basically. 23 there. Now, after this, you'll note that price moves up pretty sharply. Now, I've actually cut that off the chart. I don't really want to show you that because actually when I looked at it, I found it quite scary. It gave me a shudder. So we won't talk about that right now. And actually that's a whole topic for a different show. Now, let's go back to this. If this drop were to occur over here, that's going to scare a lot of people and shake a lot of people out. And look, right over here, I think we're going to get a lot of new people piling into gold over here. And I think there's going to be a lot of euphoria. At that point, watch out for the news, watch out for, the way people are talking. And look, I'm actually just as prone to being sucked into it as anyone else. So, if at the time I start sounding euphoric and I'm not talking about any correction, then please, please, please remind me about this video because I don't want to get caught out by this big drop here. Now, how big is this drop? Well, in this case, it would be a 24% drop. And have a think about it. I mean, if gold drops that much, the gold miners would be expected to drop even further. So we have to beware. What could cause such a drop? I really don't know. Look, it could be any number of things. Perhaps that's when the US dollar spike forecasted by the dollar milkshake theory comes to fruition. I don't know. Or perhaps that's when we get a stock market crash. I have got no idea what that could be. Finally, we'll look at these time cycles. So I've heard quite a lot of people talk about the 8-year cycle lows in gold. So I've charted that out here. And what I've done, I started from this low here in 2008 and this low here at the end of 2015. And so I've used that as the kind of starting point to produce these 8-year cycles going both backwards and forwards. If this is correct, then this suggests that the next low in gold will occur in January 2023 over here. Now that actually fits in with the last chart, doesn't it? That's interesting. Now, look, I'm a bit on the fence about this kind of cycle analysis because although it worked back, well, first of all, of course, it worked here, but even here it worked quite well. But if you go beyond that, then it's not really, it doesn't really coincide with lows. I mean, this one's kind of in a sideways motion over here. Here it's kind of close to a peak, and here it's kind of at this second peak over here, and there's a peak over here. So it didn't really work before the year 2001. So again, not overly reliable, but this kind of timing coincides with other analysis that isn't related to this. Okay, let's put this all together, and from this day henceforth, we shall call this the Diora hypothesis. This is purely a hypothesis, and only the market can disprove it. I think that the next peak in the gold price will occur between $2,500 and $2,700 in the second quarter of 2022. That will be followed by a correction to around $2,000, with the bottom occurring in the first quarter of 2023. And that will be followed by a really big leg up. Okay, look, I know I'm being really, really bold here. But look, these are just ideas, and having some ideas is better than having no idea. None of this is certain. It's merely my hypothesis created through various thought exercises using multiple different techniques. It's really bold and courageous to put such an idea forward, as I said. But to me, it kind of makes sense, you know? So I don't think it's totally out there. Next up, the market update. Well, that was rather epic, wasn't it? If you liked it, then do click on the like button so that I know that you liked it. Anyway, I've been thinking about that stuff for a little while now, and you can now see why I was so eager to try and nail the bottom. I know it's a naughty thing to do, you're not supposed to do that, but yeah, I was rather eager. And, you know, around this time I was talking about it, and I continued talking about it at this time. We're still not completely out of the woods there in terms of saying this is a bottom. I think we still need to get above this upper trend line over here to be more confident. But yeah, I still think we're going to be in an uptrend from here. So what we're looking for is a break of 1860, let's say, and I think it should happen pretty soon. We had this double bottom over here, and we've made the target for that really, and so price is just kind of chugging along upwards in a nice, calm, collected manner, which is also good. It's not good when you get really sudden, dramatic moves. So this seems much more stable, and yeah, I like it. I've drawn this curve over here. This is just hand drawn, so it's a bit subjective, but maybe, you know, maybe that's the maximum downside, 1825 from here. Not sure. Let's see if that curve is right. But yeah, I'm looking for upwards moves. You'll see that I've actually, today I'm going to zoom in on things. We've already had that big picture view in that first part of the thing. So this is actually gold in US dollars on the 4-hourly scale, just to get a closer look at that. Right, but yeah, this is going to be the big moment here, 1860. Look out for that. In terms of once we get above that, then I think 1950 is going to be probably just above a 1950 actually. This is more like kind of 1960 over here. So that would be our next kind of resistance point. And sometimes when you break out from here, you can retest this channel. But it's hard to know at what point that turnaround is going to occur. If we come up back here, that's going to be a fair drop there if that does happen. But it doesn't always do that, but we'll just bear that in mind. Let's look at silver, and this time I've zoomed in even more. I'm on the hourly scale here. And again, price is moving quite nicely. Looks like this is kind of corrective price behavior. We've got this nice channel that's formed here. The way I've drawn this, I've joined this and this, and then I've cloned the line and moved it down. And so we're moving towards the top of this. 2750 seems to be the important breakout point over there, so we'll look out for that. I think it's promising and hopeful because you'll notice here we had long upper wicks from those rejections there. But here we're kind of hanging around a bit. Look, if price does turn around and come back down, I think we'll get reasonable support over here, just about 2710-ish roughly. But yeah, I'm thinking we're going to break out above here and move upwards, and then we're looking at but just above 28 really is the next kind of resistance point there. So I think that's looking good as well. Let's look at the miners. This time I've gone back to looking at it on the daily scale. We've broken out from this downtrend and we're in this short-term uptrend. I think we're still going to be moving up here. Again, this is nice, pretty stable kind of price action. And the next resistance point I'm thinking is just above 40. So yeah, my analysis from last week hasn't really changed much there. And then finally we have the junior miners. And this has been quite boring, isn't it? We've been going up and down, up and down. So I'm looking forward to this becoming a trending market. At the moment it's sideways. And we don't know how long this up and down is going to continue. And look, I admit it can continue for longer. But just looking at the way the gold and the silver prices are, I think this might be that might have been there the last time that we test that lower trend line. This 16 level seems to be kind of quite important here. And although we dipped below it, it didn't stay there very long, and it came back up. So that's hopeful as well, but it depends on, you know, what happens next week. Let's see. I mean, there is a chance it could dip down, but yeah, we're looking forward to that 1750 really there. So yeah, we just got to be patient. But when it breaks, I think that's going to bolt pretty fast, and we'll be in a strongly trending market. Finally, a big thank you to everyone who said hi last week. It's really nice to know that you're out there and you managed to put a big smile on my face. In return, I wanted to put a smile on your faces too. So I'm going to show you a video that came across last week that manages to combine finance, comedy and music. Intriguing, isn't it? Anyway, I thought it was simply fabulous. So here it is.
Coming up, bad news for savers, as even those with high-interest savings accounts are seeing their money disappear thanks to inflation. But first, we'll detail every possible thing you could die from. He's a rational investor, dividend digester, saves some of his paycheck just like all his ancestors. Him looking for high yields, that's never the case. He's seeking 6% return, slow and steady wins the race. When he checks his accounts just to see what they're fielding, it's like driving in Maryland, ain't nobody yielding. What is he to do? He shouldn't be in a drought, so he visits his advisor just to sort it all out. Inflation's higher than your bond rate, that's what I was fearing. So your savings account is slowly disappearing, and your CDs are pointless. That's not very funny. What would you like me to do? Put it all in dog money. Dog money, dog money, dog money, dog money. I'm trading it in for dog money, dog money, dog money, dog money, dog money. I'm putting it all in dog money. My 401k is now a 401k9. The sum of my net worth ain't no longer in a straight line. I'm making smart moves, I ain't gonna be a pun. I sold my IRA and bought an NFT of one. Falling on Doge, I dish them out like a Tommy gun. You think I was statehood the way I'm passing on Washington? I feel like Matt Gates, you know what I mean? Assuring everybody it's above 18. It's a modern day gold rush, the prices will boom like Reggie White burst the oil as I'm headed straight to the moon. My broker's calling, you know that it's on. Buy dog money, don't stop till it's dawn. One more airbase, 2 more museums, 3 more walls, 4 more Supremes, 5 more stadiums. We're all out of fiat. Can you take trillions of these and go and make a zero? We pay our debts in our currency that might be unfurled if it's no longer the reserve currency of the world. Confidence in the dollar is permanent, just ask any scholar. People are exchanging their dollars for dog money. Dog money, dog money, dog money. We trading it in for dog money, dog money, dog money, dog money, dog money. I'm putting it all in dog money.
Well, I hope you liked that. If you're anything like me, then you'll want to view the original video in its full glory multiple times. So I put the link to the original in the description. Well, that's it from me this week. That was a pretty epic show. Hope you all liked it. From here, I will bid you adieu, and we'll see you next week. Bye.